Just welcome you to again another one of the live streams on Wednesday. Today, I just want to kind of go over some things. Just let you know if you're watching the show for the first time, don't forget to like, subscribe, share this with an associate of yours. I think it's important that when you have an opportunity to do something like this on YouTube, that you take full benefit of it. At the same time, know this is for entertainment purposes. Please check the disclaimer at the bottom. I do not suggest or advise anyone to buy any of the stocks that I actually talk about on the show. I believe that if you're going to buy any stocks, you should do your own due diligence. Today, I'm going to talk about some new categories, revisit my watch list, and tell you that for me, there's a couple opportunities. Some people get a second job. Other people, they don't go get a second job. They actually utilize their money and they may invest in annuities and things of that nature. But for me, I actually use my money to make income. So it's one of the greatest things that I can do, even if it brings me an extra 10 to 15 to 20, $30 a month, or even an hour. I think it's important. I do not just to be very clear, I am not a day trader. I do have a retail account, but I'm not a day trader. A lot of anything that I'm thinking about is on an annual basis. So I take a position always as a person who looks at it long term. I plan on utilizing my money for the rest of my life. That's just me and personally. Again, I want to thank everybody here. Make sure you like, subscribe. Quick little brief synopsis. If you've never been on the show before, I kind of talk about some stocks that I carry on my watch list. The question is that you always not going to know because it's my personal watch list. Do I actually take a position or I don't? But I do my due diligence to tell you if I was and the reason that I didn't. That's one of the things I think is important. So let's just go back over the watch list. In the body of the actual this video, you can actually see the current watch list, and I think it's important. I updated. I still left the information from last week on it. And that way you can look at it, you can see some differences. But as of right now, let me just tell you, the Norwegian Cruise Line at the time, so we got kind of look back. This is over a 75-day period where I look at different stocks. Do I decide whether or not I want to add into my portfolio? Do I want to hold them myself? Now, this all started on February 1st. So we're looking at literally a little bit less than 90 days. So we look at Norwegian Cruise Line. It is now trading at $12.75. That's up 11 cents since the last live stream. Okay. I have it priced in and going and that's high at $20 a share. And I had my entry around $12 a share. So that was my entry. Unless there's anything unforeseen events, Norwegian Cruise Line still stays on my overall watch list. I do anything under 12 which somebody would consider a low. But I had my entry around $12. Okay, Carnival Cruises was also another one. So I had two cruise lines. I didn't have the Disney. I didn't have the other cruise line. I just chose a Norwegian Cruise Line and Carnival Cruise Line. Now, Carnival Cruise Line is trading at $8.89. That's down 44 cents since last week when we talked about it on the live stream. Again, I still have it on my watch list. I have it at a high of $14.60, and I had my entry at $8 or less. So that's when I had my entry at. Okay, now I had Cope and Trade, and I still have that on my watch list. It was trading at $15.85 earlier today. That is down 40 cents. I have priced that as a high at $25 a share. And the entry I had less than $14. So $14 or less was my entry on that one. And again, these stocks have been on my watch list now for several weeks. Roblox. Now, a lot of you guys know kids play Roblox. They enjoy Roblox. I have Roblox on my watch list. It's been on my watch list for some time now. And I have that right now it's trading for $36.86. That is down $1.45. And the actual high that I have it priced at is $44.81. And the entry is $24 or less. That's my entry. Shop, that is currently still on my watch list. It is trading today at $47.15. That is up 43 cents since last week on the live stream. I still got Shop priced at $56.75, and I have my entry at $35 or less. And rounding up the watch list that I've been carrying is JetBlue. I have JetBlue trading at today at $6.86, down 3 cents. I have it at a high of $12.55, and I can see this capitulating under $5 if any adverse events happen. Today on the live stream, though, I want to talk about three new stocks. Should I carry them on my watch list? Now, remember, anytime I'm talking about in groups of 100. For if you guys think I'm talking about like buying one share, buying two shares, actually, my philosophy is I always buy groups of 100. That's a round lot. If I can't buy groups of 100, I'll just keep investing in my overall retail investment account until I reach the point where I can actually take a position. During that time, I built my watch list. I do my research on the companies. I do my discounts. I discount the price. As you notice, I said this is what it's trading at, but I said if I did an entry, it is actually significantly less than what the current price is trading at. So I give it time to show me whether or not I'm right or I'm wrong. Now, when it comes to the new stock we're adding to the list, well, the new stock we're reviewing today is going to be QuantumScape. QuantumScape. Now, QuantumScape, in case you don't know, is trading right now $7.52 when I looked at it last. The entry for me is around $4.70. Even though it's trading at 752, I'm not going to do an entry at $4.70. I have this priced at a high of $16. This is off the literally bouncing off that 470 price. If it bounced off that $4.70 price, I got it going up to around $16 over the course of the next 24 to 36 months. That's also a clue. Whenever I'm looking at this, I take a 2 to 36 month time horizon for these stocks to breathe into the position that I actually spoke them into. So if expand into that. Now, there could be adverse events. There could be, again, now Quantumscape is technology. Now, underneath the current administration with the United States government, they're not favoring tech stocks. So I understand that QuantumScape stock symbol QS is trading at this $7.52. As long as the CEO stays in place, as long as it trade above $1, for me, this is an opportunity. As you know, QuantumScape is in they actually make batteries for electric vehicles and accessories for EVs. So you say, well, if I want to be exposed to the automobile industry and a supplier to the electric model, then QuantumScape is the reason that I was looking at this stock. Because if I'm going to go into dealing with anything, some EVs, then I'm want to look at what does the suppliers look at. So I see this again at entry around $4.70, it peaking up around 16, and this is bouncing off that 470. Some people would say, well, I see it going higher than that. That's great. But I'm actually utilizing the 16 bouncing off of 470. So I needed to drop from 752 down on to around 470, then I could take that position. Now, for many of you guys know, if I'm going to talk about EVs and what positions I can see in the next 24 to 36 months, then I must be having an automobile automobile manufacturer I'm going to talk about as well. And that is true. It is. That's called, Rivia. Now, you probably heard about Rivia and them having, some cars. They're a U.S. company. Again, they compete with Tesla. It's trading right now at $12.14. That stock symbol is RIVA. RIVA. It's a manufacturer of electric vehicles and accessories. They actually have this. QuantumScape is a supplier of their EV batteries, and that's one of the reasons that you see them combined together. And I see an entry on this one around $5.38, and I see a high of $22.50. And I can see this capitulation if they continue to have any type of issues with deliveries or the government continues to suppress down. Now, you may think that the government is really behind EVs, but they're actually attacking with the high interest rates. Technology needs low interest rates in order for them to be successful. So I price this in with the understanding that possibly we may have a new administration. I know Biden recently announced that he's going to be rerunning his election. So he's going to rerun for his second term. Now, if he stays for a second term, again, technology is again going to see a drop. So that's why I said my entry is at $5.38. If it shows any sign that he's going to win, we're going to see another drop in technologies because he's not in favor of technologies. He likes higher rates. And that needs to be understood that when you think about it, real estate will still be affected because higher rates affect people buying house. You're getting less house for more money. Lower rates, you get more house for more money. It stimulates people to go out there and sell. Also, it tells people who actually been in the house for a while, it's time to get out because I can make a whole lot of money. But doing higher rates, it's harder to sell your house at just any random price. The bid wars kind of slow up because it costs so much to buy. And the other one that I have on the list is Helmick and Payne. Now, this is a stock that I have been in and out of over the course of the last 3 years, and I've made money with. And the stock symbol for that is HP. This is a drilling solution and technology for oil and gas. Now, for many of you may not know, if you want to be exposed to oil and gas, sometimes you need to also think about, at least for me, I always think about, okay, I'm going to be exposed to oil and gas. If I'm going to be exposed to oil and gas, I need to make sure I have a stock that provides the equipment for oil and gas. And where do they rank in the equipment? And this is HP is number one. When it comes to offering any type of drilling equipment, supplying the needs of the drill, this is the place they go to. So if I'm going to be exposed to oil, and right now, oil prices are extremely high, doing high rates, commodities actually are better purchases. So it's too expensive really to me for me to be buying any type of oil company at this price because the prices are up there. I missed that opportunity. That opportunity should have been taken if I was going into oil stocks today, back in November of 2021. Now, anything prior to November 2021, you would have paid more really on a premium to buy oil. So for me, I just decided that it's best that what is the second best thing to oil? The oil companies that do it. Now, Biden's kind of been, secretly, I'm not going to say he just jumped out there and did it, but secretly he decided that he's going to start approving more of these oil leases. And because of that, you see a slight change in administration. Underneath the previous administration, they were giving out oil leases all over the place, which means that oil prices were low because we were independent. We was literally producing enough oil for ourselves to maintain our country. Now we're not energy efficient. We are actually having to go out and purchase from other countries, and even from the extent of trying to negotiate and buy oil over the last like year and a half ago with Venezuela, which makes no sense if we have the ability to produce our own oil, and especially in the Great Western and bisons down in Texas and Oklahoma. I mean, we have those areas in Kansas where we can produce enough oil ourselves. Now, regarding these, do I see from these three something that I can add to my watch list or take something off? Now, whenever we're talking about stocks, we need to think in this regard. So groups of 100. So when I'm looking at QuantumScape, it's going to cost me about $752. Now, the price might have changed on the stock symbol QS since I started this live stream. But at the time when I started it, this is what the price was. And Revlon is at $12.14. That's about $1,200. If you notice from the high to the low, I priced in doing discount rates. Now, do your own research on these companies. I tell you, my disclaimer is this is entertainment only. This is entertainment purposes only. You guys may see some of these stocks. You may even see some of these get realized. But remember, you must do your own due diligence. If you don't know how to price a stock and do a discount point to make sure you price in any type of adverse event that could take place, I suggest that you go out and speak to an expert, someone, you may have somebody manage your money or do in that regards. But for me, my position I've always taken was I am my own expert. I save my own money and I do my own due diligence. So as far as today is concerned, I'm going to go ahead and add on QuantumScape, QS, and Rivian onto my watch list. So I'm going to expand my watch list from literally having one, two, three, four, five, six, 7 stocks to now carrying 9. Now, when I get to 10, I will start to uh, move things around. And since I say I'm going to add to 9, but there's a couple that I'm on the border about. As of this week, it still remains. Next week, it may not, but I'm on the border with Roblox and Shop. They priced pretty, it's up. One is to buy 100 shares of Roblox right now, the price being $36.86. And notice that I've been noticing that again. I have my entry around 24. I still know that that's still good. I see it still going up to 44. What we need is lower interest rates. Um, I tell you, Roblox will jump through the roof if they ever do another lockdown, because that's when parents were spending so much money to keep their kids away from them since they were locked in the house with their kids, and Roblox stock was trading extremely high. Well, in this event here, it looks like I'm gonna put a little tag. I mean, they're gonna be on the list, but I have Roblox and I have Shop possibly coming off the list as I put on the list uh, QS and RIVA. So this is what I got looking at right now. There's still so many plays within my watch list that I really don't need to add anything. But I just looked at being exposed to some of the technologies. I mean, here we are. We're in this year. People still talking about EVs. I personally don't own any EVs. I don't have any desire to actually buy EV. You may say, well, how come you're buying EV stock? Because if the market wants to pay those prices, I'm willing to get paid by the company that you're willing to buy those prices from. So that is my position on that. But I'm gonna always be, just in general, I'm going to continue to utilize the automobiles that I have. Even if they switch and they start making them all electric, I'm still gonna, maintain that. I mean, that's been my position. People that ask the question, I do have different devices that are electronic, and if you know what happens, you overcharge those batteries. I have an associate of mine that has a Tesla, and one of the things they said was they starting to have issues with overcharging the battery. You got to understand that all batteries have this issue. Every cell phone And the new updates for technologies, one of the ways that they get you to buy a new cell phone, I don't care if it's Android or Apple, is when they do the software updates. Those software updates have codes in it to read, especially as newer phones come out, to make it harder for you to update. But those new updates suck more of your battery life and it begins to take the capacity away. So all of a sudden, you notice that your phone, if you got an iPhone 6, 7, 8, 9, or 10, and used to, let me go this at least 8. I think 7 and 6, they can't take any more updates. Maybe 9 is the same way, maybe 10 is as well. I'm not, well, no, 10 will be because it's iPhone 14, but 10 you'll be able to, but you go less than like those 8s or 9s, you can't no update that new software. And because you can't, you also notice that your battery sucks the heck out of life. Well, Teslas are starting to have that problem. A Japanese company, Neo, they're having that problem as well. That's the reason that Neo has that battery drop off, and they had different locations where you can go and take the battery and then switch it out. That's what Neo adds. They actually added the fact that you can go and get a battery, so that way, if you do overcharge, you got a service site where you can drop that battery, pick up another battery. Well, Tesla doesn't have that. You got to take that car, So that whole process, he told me when he had to switch it out was expensive. It was almost like putting a new transmission in your vehicle. You know how your transmission drops? So I mean, that's just one of those things. I'm like, well, that's why I'm going to add QS to my watch list and then Rev. That's why I'm going to do it because I realize that is a issue and that's a moneymaker because in the regular traditional automobile industry, you have at any car dealership, they're going to have their service department. Their service department is made to price gouge the heck out of you. Not only do you get to overpay at the services at the dealership, which some cars you have to take there no matter what. If you want to maintain that warranty, you can't have no aftermarket parts if you want to be able to sell your car for value. So with that being said, today, this is the watch list. Don't forget to check out the body. I would tell you that out of the 117,000 plus subscribers that we have that watch our channel, only 26% of them are actually that's not correct. 1,000 out of the 117 plus thousand subscribers that we have on our channel, the people who watch our channel, we got 73% of the people who watch our channel here, at least on Wednesdays. And then on Mondays, I'm going back to talk about just business itself, to break down these companies in the form of just talking about business, about Quantumscape's business, Rivalry's actually business and sales, Hellman and Payne, Copon, Carnival Cruises, Norwegian, and just these a little bit more foundation. So Monday I talk about the companies themselves, what I see, and then on Wednesday I go back and I discuss overall how I see the actual my stock watch list and what I added or what I took away. Again, I don't really go into details as far as what I hold, because that's again, I do my due diligence public, but I do not expose that. Here's one other key factor I would definitely tell you: if you haven't subscribed, definitely subscribe. Also, like, it allows for the content to go out there into the marketplace, so more people find out about our channel. Every Wednesday, we back on schedule that I talk about the watch list. Do I add anything new? I don't. In the event that you guys have iPhone 7 updates is at its limits. Okay, so iPhone 7 as well. So iPhone 7, I was talking about that early, guys, but iPhone 7 does not allow you to do any more updates. Now, what does that mean? That means that they're forcing you to go out and buy a new phone. It used to be that, some of us still have landlines. I mean, I know my parents still have a landline. I don't have a landline, but my parents do, and they've had this phone for years. Bell Atlantic was the original carrier there, and because where they live at is still Bell. Bell is still one of their carriers. You guys will probably be surprised because most of us don't have Bell. But this is what I'm going to tell you. In the first quarter of 2023, January, February, March, there was an opportunity where you should have. I mean, if you're a retail trader, you're out there. There was enough opportunities between January to March, even though we're in a bear market. Now, keep that in mind. I put text in the body of this that tells you about a bear market. But during a bear market, you can make money, and you can also enter stocks that normally you wouldn't be able to afford based on buying 100 shares of them because they become available. You have to take advantage of a bear market because it brings down prices to the point where you can afford them and buy in groups of 100. So you can buy 100, 2, 3, 4, 5. When normally, if these prices were in a a bull market, you would actually be only able to buy maybe 50 shares or less because some of them can be quite expensive. Now, remember, look at the stock market from this perspective, like a swing. It swings up and it swings back, and the swing has the same distance. I've never seen a person swing on a swing set at any type of back of the school or local park where they swung so high that they was able to wrap themselves around and stay in that seat. I seen where they can go up a certain part and go swinging back that same distance. Well, that's a bear market, that's a bull market. And you have to be able to navigate both markets if you're going to be a long-term income maker utilizing your money. Again, everything we do is on an annual basis. Everything I do is on an annual basis. When I say we, I was assuming any other retail trader out there, but I need to speak for myself because I can't speak for you. But I don't day trade. People ask me, "Well, no, Primo, how come you don't day trade?" Because I find out that there's a better opportunities, and I can do more research. I don't. It's not that day trading you can't make you need to have large sums of money to day trade because a 5 cents to a 20-cent move is a lot of money. If you have a million shares, that's a substantial amount of money. And a lot of these companies that day trade, they actually don't manually do it. They have these big mega computers and these gigantic T lines, and they trade on software. Now, if you're a retail trader, most of the time you trading by finger. You're at a disadvantage because if you ever seen someone double dutching before, or you got one single rope and you see a kid standing outside the rope, they're afraid to jump in. Another child just jumps right in, get hit with a rope. It doesn't bother them because they understand how that if they get hit, they know how to miss the rope the next time. Well, double dutch is two ropes. Well, you have a bear market, you have a sideways move, and you have a bull market. So you got to be able to go into these stocks and actually understand that that's part of it. And whenever you deploy your resources, and this is another thing, just so you get a little caveat. I don't use at this particular point the things that I'm doing with the trade is to generate income. It's to make more income for me. It's not for me to get a part-time job. My money works part-time. Now, most people say that, well, I trade stocks part-time. Okay, I get that because you generate income. But the goal is to make income over an annual basis. If I can find a trade where I can put on my watch list, buy the stock, hold it for 12 months, I can reduce the capital gain tax by 10% that I have to pay Uncle Tom, or we like to call the IRS. If I hold it less than 9 months, I'm looking at about a 20% capital gains. There are times where I got to deal with the 20% because the exit has came. And when the exit comes, I have to exit that stock. I'm not greedy. I understand that a lot of people do, but most of the positions that I hold, me personally, it's for income. So if I have an opportunity to buy for income, I'm still looking at a 24 to 36 months. In the event that, like I said last week, in the event that it hits the goal, like I say, DraftKings was one of the stocks on my list. It took less than 70 days for DraftKings in that position, if I purchased it, to make literally $899. So if you had access to the same amount of money, you could have made $899 in 60 days. If we take so what you do is you take how long it took for the trade to take place. That's what I do. I take the trade, how long did it take place? And then I divide it by how many days I held it. When I divide it by how many days I held it, it tells me what I make per day. It tells me what I made per week. It tells me exactly what I made, on a monthly basis. So if you take 899 and it was 60 days, you can do the math divided by 60 to tell you what I made per month, divided by two, just tell you what I made per month. The reality is, right now, with banks and institutions not being in favor and the rates at bank being so low, and as long as they keep increasing rates, you're going to have to beat inflation. I mean, period. Things are getting more expensive. I was just in the grocery store and bread's up by 4 cents. Guys, it ain't going down. Bread's up by 4 cents. As you know, we just went through the egg crisis where eggs are still high right now. People are paying an exorbitant amount of money for some eggs. You also have dairy that increased by 12 cents in the last 60 days. So you go to some of these stores, you're seeing even higher prices because if it increased by 12 cents for them, they got to make up that difference. So they got to add 12 cents to their margin plus an additional 12 cents. So that's a 24-cent add-on that the consumer is now absorbing that you wouldn't be doing during inflationary periods. And whether you like it or not, we're in a bear market across the board. The sectors that's not in the bear market are commodities. Those are inputs, which means they're not finished goods. So, well, this is the live stream for the day. There's a lot more I can talk about, but I'm going to go now and talk to the other group of people on the live stream. But I just want you guys to know that way we get back to it. We're back. If you got any stocks that you're thinking about, and you should say, hey, I think you should do a video on this. Just put it in the chat. I'll come back to it and look at it and see and do my due diligence and talk about it on Monday. Till next time, guys, you have a powerful day, and I look forward to you next week. Bye.